Come on in, everybody. We'll get started in a little bit. Not a rush. Basically, not much happens, and then we get the number, and it goes crazy for a couple of seconds, and then not much happens again for a while. So we have
Hurry
some
up
other
and wait.
Yeah, and we have some other stuff we're going to do between. After we get the number, I'm going to talk about some stuff on my screen that's a little bit different for the newer folks, or for everybody. I simplified stuff a bit, specifically for the upcoming class, but also just to make a point.
Hey, you have a couple more price action charts now.
Not really. I always had them kind of layered, and I finally
it's
figured
just
out
gold
a
and
way.
oil.
I just figured out a way to get everything all on one screen, basically.
Got it.
And
Nice.
and I shrunk my jigsaw domes down. I took out current trades, basically, and I only have total trades in there. So basically just have footprints.
I thought they looked skinnier. I wasn't sure.
They're skinnier and they don't have all the flashing lights, which...
Oh, yes. The
pros and cons.
Momentum tails.
The momentum tails because those are on the current trades. Current trades are reflected in the totals. They just don't look quite as flashy in the process of doing it. So, and I'll explain what that's about after we do the number and whatnot.
Cool.
Is David here? David? No, he's not. Let me know if he comes in. Send me a message.
Let me ping him, see if he's around.
Yeah, because part of this is response to something he said yesterday that I wanted to clarify for a bunch of people. By the way, this is kind of the way I had it when I did the 2019 workshop. I had current trades on them then too, but I had these narrower domes with the 2-level power meters. These are different power meter approach than before. Also, I'm not looking for blocks there anymore. I'm just looking at the momentum of the delta, and this is interesting. Yeah, let's see. Brent's here. Who was the other person I was thinking of? Lance. Is Lance here? He is not yet.
He's not.
Anyway, that's also a response to something that I was talking about, an idea he had with respect to the tracking the delta and the variance of the delta or the average of the delta in the very, very short term, on the 15-second view. That this is part of that. So anyway, we'll talk about all this after we get the number and we have some time. I'll explain what the differences to me are meaningless. It's just another way of looking at the same stuff. But the reason I made the change and what I'll explain after we get the number is that I think for newer people, this might be a better way to go. So that's why I'm going to do it for the class, and also just, like I said, as a response to it. Some things that David said, and just some things I've been looking over notes from all the different classes. I do that before we start a new class, and since we have this one coming up next week, actually, isn't it?
Yeah.
The first session for that is Friday.
July 9th, I think.
Or is it the 6th? It's the 9th. Yeah. Lee, help us out here. We're calendared out.
Looking on my calendar.
Yeah, next Friday, 9th.
Friday. Okay, cool. Yeah, if you're just coming in, we're just babbling here for a few minutes before the number comes in. I'll introduce what's going on and whatnot for the guests in a few minutes. Right now, we're just kind of chatting and drinking coffee. So come on in. For TRG folks, just a reminder, this session is open to the public. We invited the Facebook group folks and Twitter folks, so we may have some guests. We're not going to indulge them with a lot of Q&A or anything. We're just going to do live tape read, and then, as I said, I'm going to explain what I changed in my point of view that you can see here. Still looking at the same information, looking at a simpler version of it that I think might be useful for newer people trying to understand tape reading. Because when I see people learning it, like watching David yesterday, I go back and I think of all the things I went through, and I keep notebooks on my different training approaches to things. And learning order flow, I tried a lot of different approaches because I found it hard to learn. And this was one thing that this was a simplification that was helpful. So we'll talk about that after we get the number. Anyway, we have NFP coming in about 13 minutes. And, you guys in TRG all know this, but for the benefit of any guests that we have today, The number, who cares? Whatever the number is irrelevant. What we're interested in is the reaction to the number. And so many people try to game the numbers, and I don't get that. There's too many variables to predict whether a number up or a number down from expectations will have any impact. And but there's relentless people on Twitter calculating, well, if the number comes out here, it's going to go here. And it doesn't work like that. Markets often respond very illogically to things. There's perverse logic in financial markets simply because of the variables. For example, here's a simple example. People, the economy is bad. When the economy is bad, and the Federal Reserve, for one example, stimulates the economy by lowering rates or putting money in the system or whatever. That stimulative effect actually makes stocks go up, even though the outlook for profits is going down. So that's a perfect example of perverse logic in markets. So the point is, the number itself is completely meaningless. Don't try to be so smart to figure out what the number means when it posts up. We don't care. I don't even look at the number. I just look at the reaction. And the other thing that's really important to understand, TRG folks, this is review, guest folks, again, not going into a lot of detail, but there's basically three kinds of price action that we like to track. And this spreadsheet has the examples. There's this kind of rangy ebb and flow stuff, which is what's most of the time what we get. There's price discovery, which is what happens right after the number when the bids and asks all disappear and the price moves around trying to find value. And that's what we're going to get. And then there's momentum, and that's a different thing. We'll get that around the open. If we're still running at this session, I'll talk to that then. But basically in price discovery, there's only one tactic. You either don't trade it or you trade it at extremes. And that's that simple. So the first and only thing you really need to do before a number like this is just stake out what extremes. What are the extremes? So this top row of charts I have up here are on 90 seconds. I'm going to flip them out to 5 minutes real fast. And the reason I'm going to do that is just so we can see the edges of the volume profiles from overnight and from yesterday for each of them. And that'll give us a rough idea where the extremes are. It's that simple. So while that's happening, let me just go grab an example. So here's ES. And these are basically, the blues are the regular sessions, the whites are overnights. So you can see the overnight session we're in right now, and we are above yesterday's session, which was above yesterday's overnight, and we're in a pretty good move up here, right? So where are the extremes? Well, right now, the bottom of that is 08, the top of that is 11. So, the 5 to 11 area is certainly one. And then the first hour high of yesterday is 01. That's beautiful, right at that big fat whole number, 4,300 area. So that's what I'm watching. Those are extremes. The other extreme is the high, 17.75. Ledges always break. So looks like it's actually a little higher than that. 18.25 is the high. So worth watching. Anything in the middle is just stay out of the way when we're getting price discovery. So you can see this is the overnight range on each of these. If I kind of crunch it together, we can see what happened the day before. This is yesterday's range, and then the overnight is in here. These ones aren't colored like the other ones are, but you can see, it's pretty much a move up here that we're in across the board. Even gold is reasonably strong. Oil is consolidating. So anyway, that's what I mean by extremes, and this is a really good example of being patient for them. So I'm going to put those back to 90 seconds. I like to look at where the indexes are kind of relatively. And just so you know what you're seeing, the far right over here is the micro ES. This next one over is ES. This is the RT or the NQ rather, the micro NQ, micro RTY, micro YM, and then gold on the far left. And I'm only using the micros up here in the event that I actually trade it while we're talking. I don't want to put on a whole lot of risk. But the micros or the minis are going to behave roughly the same, even though they're not identical. The tapes that you see running are for the larger contract. So even if I'm looking at the dome of the micro, the tape running is for RTY in this case, whereas that's the micro. This is MNQ, the micro, but the tape is NQ. And I always do that when I'm watching a smaller derivative instrument like MES. I watch the ES tape. If I've got them both up, in this case, ES is up and MES, then I'll run both tapes. And I'm filtering these tapes very, very slightly in a couple of instances. Again, I'm not going to get into a lot of that until after we get the number. And then for the TRG folks, I'll go over what is a little different in this layout. It's just a little bit simpler than the ones you guys are used to seeing. So that's that. Are we allowed to invite? And yes, this is public, Summer. The link is in the, well, they have to register on the link that Lee put up. Here, I'll throw it up real quick. And then the link for the room should have gone out already. Is that right, Lee? Am I on the right?
It's gone out. You can just share the Zoom link now, Jeff.
Can you give it to me? Which Zoom link did we use for that?
Hang on.
Let's see. Is it just this one here? That's the invite link.
Yeah, exactly.
Yeah, okay, here. So I'll put it in the, there we go. JVC got it. Yeah, thank you. I'm trying to drive and do admin at the same time, which is complicated. All right, anyway, so we've got the number in about 6 minutes, and we'll see what happens. I'm letting it build footprints for me here on the jigsaw domes. I'm going to reset that right when the number comes out by doing this, like I'm doing. And so basically it'll start with a fresh footprint across the board, and we can see how it trades right when the number comes out. And then we'll talk to it. So let's see, let's spread these out just a bit here. Alrighty, so let's see. Wow, Smoky Mountains, Amy, have fun. It's pretty up there. Okay, cool. All right, I don't see any other comments that I need to address. So anyway, if you're just coming in, welcome. If you're one of our public guests, this is a regular session of a subgroup of TRG, of Trading Research Group, called Doc's Scalping Circle. You can probably figure out by the name, our focus is on scalping, and we are about to get the NFP number, non-farm payrolls. And when that happens, we're going to talk to the response, and if there's anything that looks tradable, we might trade it. So that's what we call here in TRG a live tape read. And I'm just spreading these out a little bit so I can see the volume. One more time, right to left, you're seeing the MES, the ES, the micro NQ, the micro RTY, the micro YM, and gold, micro gold. And I'm just in the micros because I'm probably going to trade some of this live, and I don't want to put on mini size positions while I'm teaching because it's too easy to get distracted. So anyway, that's what we're going to do. The number comes out in 4 minutes. And again, one more time, I couldn't care less what the number is. I'm interested in the response to the number. And so we'll see what happens. If we're going to trade this, we're going to trade extremes. So it's going to have to be at the low end of the range or the high end of the range. I generally don't trade the NASDAQ or the Russell or the Dow futures on a reaction to a number. I tend to focus on just the ES, and so that would be, or the micro ES, which is these right two-hand ones. But I have them all up so we can see just how they interact with each other, which is correlation or lack thereof, and that's a big thing that we do in TRG as well. Because the beauty of the indexes in the US is that they tend to work kind of together. And if they're not, that means something. There's something going on. And if they are, it allows you to watch capital flowing from one to the other, which can be an edge. Okay, you can see we're getting real thin now. As we get close to the number, there's now a 4-point gap in the micro NQ bid to ask, and you're going to see the size, which if you look on, this is the ES dome here. If you look, these are all the bid orders and the ask orders. So that's basically the order book in kind of a light gray. I don't pay much attention to it, but I do watch it. So look for that to just thin out and for bids to disappear and asks to disappear. Nobody wants to get in front of the number, in other words. And so that's one of the reasons you just generally don't trade this unless you get extremes, because even if you're right, getting a fill with your profitable position can be impossible because the spread is so big. So let's see. Just looking real quick. If you have questions or comments about anything I'm saying, please stick them in the text chat, and I kind of keep an eye on that as we're talking. So I will answer questions if I see them there as soon as I can. Anyway, sometimes I get busy doing stuff, but right now it's just to take a deep breath, have another sip of coffee, and get ready to roll. I have no biases and no preconceived notions about which way we're going. There's unfinished business up at the top of the overnight in ES, which is interesting to keep an eye on. I'm watching this on another monitor. This is a 30-minute footprint, and you can see we have not quite finished off the auction up at the top. That's worth watching, but right now it's meaningless. Right now, the reaction to the number is all we care about. After we get that and it settles down, then the structural levels will become more important again. But when we're in price discovery, nobody cares about price levels, and too many traders get married to price levels. Price levels can get run over really fast when we're in price discovery right after a number comes out. I mean, what does that mean practically? We could go below 4,300 in a heartbeat, and we could go to 4,400 in a heartbeat. So trying to predict which way or why or how is fickle, daft, waste of time. So we have the number in 1 minute. So take a deep breath, and here we go. Look how thin the book is getting now. This happens right before any large economic announcement. Nobody wants to get in front of a big move. Okay, so if you're just joining us, we're waiting for the number, which comes out in a matter of seconds. See, on my clock, it should be like right now. I don't know if my Windows clock is caught up. It says 7 seconds, so. Look how thin the book is. Okay, the number is out. There we go. We are in price discovery. And so let it play. I will be right back in about 15 seconds. I'm just going to let this go. I've got to go run to the door real fast. Okay, looks like we caught a bid. How about that? Pushing up toward one of the extremes I talked about, so that's worth watching. Maybe a potential short, maybe not. It cleaned up that unfinished business we had. So I'm watching this over here on that footprint. You can see it just took out that unfinished auction level. That doesn't mean you just run in front of it and short it, though. It could get some legs and continue up, which looks like what we're going to do. So I wouldn't buy this. I never buy into this kind of aggression as a reaction. I tend to like to fade it, but this is too strong to fade right now. So I'm just going to watch it. And you can see the footprint that I reset right before. And what I'm going to do real quickly is reset that again so we can kind of see how the trading is going right now up here at the highs. So if you watch this ES, these are trades going by on the bid. These are trades going by on the ask. So basically, I'm getting an order flow footprint right there real time. And so we can watch the battle, and the net result of the battle is that number right there. So right now, the delta just went from negative to positive, and we're pushing up again. And you can see that happening on the tape as the blocks go by on the buy side, which is the blues and the greens. So this is a decent move up. I wouldn't fade it, but I wouldn't join it yet anyway. Within my approach to price action trading, I look at it from a sequence of three things: direction, momentum, and nearby inflection points. And so right now we have directionality. We're going up. We're doing it decent. You know, you could have joined this long, but the problem with that is you're susceptible to sweeps. If people start taking profits on this move, you're seeing that in NQ over here where it's getting swept down, 3, 4, 5 ticks at a time. So far, NQ stable or ES is stable. So let's see if it can develop a high volume node up here, which would then be very tradable. When these things first happen, I either fade them or I stay out of the way. This one actually might be fadeable here right now. Fade as in shorting it. Yeah, you know what, just for fun, I'm going to try one of those. So we're short 21.25 here, and I want to get a stop in really fast to protect that. That's the idea of this type of momentum scalping. So as soon as I've got 3 or 4 ticks here, I'm going to throw a stop in. Right now, it's just up here as a catastrophic stop. And if it starts going back up, I'll just flatten it out. But right now, it's just sitting right there, and there's a little bit of selling right there. That's why I kind of like it short for maybe a scalp here. You know what? Let's do it that way instead. Let's just see if we can pick off 4 ticks to the, there we go. Okay, so, wow, that's, boom, we got filled. All right, that's fun. So that was a little short scalp off this little inflection point that's forming right here. And notice how, you know, if we tried to do that earlier, when it first did that inflection point at 20, we would have got run over. Now it's starting to form a consolidation. And so that's why that's a spot where I would try that. I would only try that at certain times. Like I just had a really good entry there. I got it. We got a point, but it's still moving around too much to do that consistently. So it needs to settle down. What I'd love to see as a price action scalper is building a nice big high volume node up here, because then we can define risk being short or long around that high volume node. Problem right now is we have a high volume node forming up here, and then the next one is down here where we were before the number. And so there's this gap, and that's the risk of trying to play this either way. Short, the gap works to your favor. Long, you know, where do you get long? That's the problem. You could fall back through that, consolidate down here, and then push up. So something's going on with my computer here, flashing. I'm having Zoom doing that. What's going on here? All right. Hey, JBC, is the video feed okay? It's giving me some weird interference.
Looks fine to me. Yeah.
Okay, cool. JP, the numbers are relevant. When I introduced the topic at the beginning of the session, the market doesn't care what the number is. Looking at the number is a fool's game. Just look at the reaction to the number. There's way too many variables to game whether the number is good or bad. And too many people try to do that. And it's just a very retail approach to the market. You're not that smart, neither am I, and nobody is. Boy, look at gold running up. I happen to be long gold here, so I'm in good shape. It's up in the 90s again. That's turning out to be a nice trade. Market is consolidating up here at these highs, or, you know, the high of the session so far, of the pre-session. So, you know, that's a pretty strong move. If you want to see what that looks like over here on the 30-minute footprint, this was where our unfinished business was, right down here, and we blew right through there. So that was quite a nice move. If I wasn't teaching, I probably would have played that long, but that would have been too hard to explain and do at the same time. So now I'm just looking to see if it truly consolidates up here and presents a good short opportunity. We're right at the edge of the range. Yeah, you know what? I think it is doing that. So let's see if we can get a decent entry up here on a short. So I like to scale into these, so I'm going to stick a couple in there and then throw one on at the market. And it's already working. Good trades work right away. That's what we like to see. Let's see if we can lock in a couple of ticks here. Come on, get a little downside traction. I start with a catastrophic stop, and then what I do is I try to get it between the market and where we're trading my entry as fast as I can. So I'm short 22 here, trying to scale in a little bit just for a kind of profit-taking pullback. And so I want to get my stop between the trade and 22, but I want to make a few ticks first. So I'm going to shoot for 3 ticks here. There we go. Okay. So now we can trail that down. And if I get a runner, we'll keep it. If not, boom. All right. We got a point out of that one. That was nice. So anyway, you can do that all day long in this type of price action when it's just consolidating. So I'll see if I can get a better entry on that. Let's see. It's not even buy the rumor, sell the news, JVC. It's the news doesn't matter. Everybody thinks that the number matters. It doesn't. It's far too complicated, the economy, to say, well, if the number is this, then that means that. It just doesn't work like that.
Yeah, absolutely.
Even among economists.
Making fun of that.
Yeah, exactly. That's one of those old trader things, like, you know, the trend is your friend.
Exactly.
You know, well, it's a trend up, and I just shorted it twice profitably. So that's not always true. Okay. Let's see. Yes, welcome guests, everybody. I'm just kind of babbling about the price action here since we got the number. The number spiked us up, and then what we're doing is we're consolidating up here at the highs. I have a variety of ways that I look at this. This might be a good time to have a look at the footprints kind of faster. So these are the footprints of the micros, and we can kind of see what's going on up here at the highs. And right now, that one's 5 minutes. I'm going to take it down to 3 minutes, get a little more granular. So basically, this is the high that I'm shorting, or I was shorting. Wouldn't necessarily do it again because it's really not going anywhere. It's building a really nice high volume node right up here. So, going into the open, that's what I want to trade. I don't want to just keep, trying to short this. It could go up from here. We're in all-time highs. There's no resistance because we've never been here, and support is daft because it just doesn't work like that. If it was that easy, you just sell the highs, right? So, you saw me just get two profitable shorts there at the highs, but this type of scenario where we have a big run up and then it consolidates is really dangerous to try to predict because, it could consolidate up here and then continue up. It could consolidate up here and then drop back down to the high volume node down here at the 10 to 12, 15 area. But assuming that's going to happen is dangerous. As I said, if I get good entries into this, I would love to play this short, but I wouldn't just naturally short it and assume it's going to drop. It looks like 20 is in play right now. That actually could be a better entry as well. Again, this is the high volume node. If it leaves this high volume node, that is worth watching. But this time of day, I don't like to get too aggressive. I'd rather trade the open aggressively, which is in about 40 minutes. So let's see if we can catch a pop up. Maybe they can squeeze some shorts, push the highs again. And so let's see. So that's 24.75. There's a big block of sellers up there. Another one there. So yeah, those are two decent spots to stake out. We'll just leave it there and see what happens. All righty. So if there are any questions or comments, throw them in the text chat and we will address them. Basically, what we have right now is we have this kind of rest period, I like to call it, after big news. So here, let me throw up. This is a view of the ES that I like to use. It's basically 90 seconds. I'm looking at the volume in waves, measuring the volume from the low to the high of any swings. And so this move up here was on 12K from the low to the high. We have a pullback on 17K. See that right there? That's significant. We're pulling back on higher volume than we moved up on. And that's why I was shorting it. That if that was a really low volume pullback, we went up on 12, we came back on 1 or 2, that would say, the buyers are in control, but they're not. We had buying spike up, maybe they caught some shorts off guard, some momentum traders jumped in, and now we're consolidating up here and forming this high volume node. This is no man's land in trading and scalping. You just don't want to play here because we don't have enough information. This is telling me that it's a good short, but price isn't going down, which is telling me there might be some more buying to happen. And so once again, unless I can get a better entry up here at the highs, then I'll play short because it's asymmetric. My risk versus my reward, and I do not use a fixed ratio of that. I'm just looking for it to be in my favor. Like right now, it looks like a good shot. You know what? I'm going to take one there and see if we can get another one short when that gets there. So basically, I'm reading the action right here, and I'm saying, yeah, that looks like I could have a good shot at getting 4 ticks or so. So let's take a shot at that. And I'm going to reset this footprint just so we can kind of see the fresh trading. So boom, good. We got the other one that I wanted. Remember, I had an order resting up there. So now let's see if we can get some fills on those going the other way. It's probably going to push up, but it's volatile enough that this approach will make sense. I'm looking at the range down here on this 15-second view with linear regression. In this type of session, I cannot explain how I'm doing that. That's what our class is for. But that right now is projecting that the range is going to push up a little bit more, maybe as high as 26. And you can see there's some sellers up there. So let's see if we get that one filled. And again, I'm doing this in the micros and I'm scaling in. I'm just playing the price action. Okay, now it's coming back to me. So let's see if we can take some profits here. Get that first one off. Okay, close, but not a cigar yet. Okay, now we're profitable. I can lock it in and see if we can write it down. So you can see I'm short 23.25 here. I've got a stop to lock it at 22.5. So we're locking in 3 ticks. Maybe we'll get more. The bottom falls out here. Nope, it won't. So I got my 3 ticks. Again, you just can't get stubborn that, I'm going to be short. I'm going to stay short here. The trick is just to ride the price action back and forth until the market decides which way it's going to go. This is a really nice little range to scalp. And I'm using a 15-second linear regression to do that. That's this view right here. And I'm basically just watching the price action and the volume inside the range. This is that big move up we had on the number, and we have not attacked that since. So good short entries will work until we blow through there, which is likely. And then there's probably a better short up here somewhere. Playing this long is just too dangerous. It could easily retrace to 15 for any number of reasons. And you would just be totally caught short if you tried to be long there. So figure of speech. You don't want to be long this setup, not up here. If you're long from the lows, that's great. But this is not a long setup at all. It could certainly break out, but this is not the place you want to try it. Anyway, I'm going to cancel that order and I can see a lot of writing, so I'm going to see what questions we have. Okay, all right. I see Summer's talking to Elena. That's great. Thank you, Summer. You can probably elaborate on my techniques faster than I can while I'm teaching, so I do appreciate that. Okay, Elena has a question. I'll just read it out loud for everybody from the text. For Jeff and Lee, I've been trading futures since January. I'm fairly new. Yes, you're very new, January. You're a rookie till about 5 years in this game, Elena, at least. So I've been in another course, but without explanation from this person, got even more confused. Struggle to find proper edge, so you can repeat and make it consistent. Okay. So I'm trying to get to the question. Lee, can you help me out on this one?
It looks to me like she's asking about videos, if there are.
Basic videos of order flow and how to trade NQ and ES properly. Our beginner's course is the way to start learning in a structured way.
Yes.
Somebody else is asking me privately about, are there recordings of the course? Do I get access to these recordings in the membership? The best way of learning is to join our beginner's course and go through the syllabus that we educate live. Because you can interact, you can ask questions, your understanding is going to get embedded. Yeah, sure, you can join Trading Research Group, and if you take a 3-month or a 12-month membership, or you've been in for 3 months, you will get access to recordings of beginner courses. But watching it and doing it at your own pace is different. If you join as a member and you go through our library of various educational clinics and whatever else, the information there is all relevant. We can give you recommended orders in which to watch things, but it's the difference between trying to learn piano by watching YouTube lessons or going to see a piano teacher. So, this is an acquired skill. You will learn best by attending a live training class.
I completely agree with that. I just want to show you guys real quickly the library, though. There's like 1,500 hours of recordings of classes and live sessions in our library. And this is the library right here. But I totally agree with what Lee just said. Those are all the courses or the recordings. There's literally hundreds of them. But the point is, in this course that's coming up, the one, the order flow class, let me go back to the syllabus for that. Come on, Jeff. We go through this in sequence, a lot of the stuff that I was just talking about. And so, for example, following a process and scalping using price action and linear regression, which is what I was just showing over there on my fast 15-second view. So we go through all this, and Lee goes through a really good explanation of how to read structure, like that unfinished business that we blew through that I said we were likely to blow through, and we sure did. That's a classic way to read footprints, but you have to hear it from someone that knows, and you have to see it taught properly, and then you have to practice it. And so that's the approach we take in TRG. So hopefully that answers everybody's questions about the approach and the recordings and all that. If not, please give us another shot. in the text if we can clarify. Meanwhile, what's going on here? Well, we continue to consolidate right up here at 2275. I would no longer look for shorts here at all. We've been here too long. We've established the spot. So between now and the open at 6:30 my time, which is in about, call it 30, 40 minutes, there is nothing to do but let this shake out. I wouldn't stake a position out in either direction. Why? Well, real simple. We came up here really aggressively. So this is what, in this process that I previewed here a second ago, I showed you that I have 3 different types of price action that I'm looking at. And basically, price discovery is what we just saw. Ebb and flow in a range is what's the most common. And then there's high momentum. So let's just look. That all just happened. This is ebb and flow in a range down here. That's what we were doing right before the number. And that's actually very tradable as long as numbers don't come out and you stay out of the way of that. But that's a different conversation. So the number came out and we had what we call in TRG HMOMO, high momentum. And you can always join this if it's going to continue long enough. You know, if you were really fast and got in there long, you could have caught a nice little move. The market then went into ebb and flow again, which is what we're doing up here. So it's basically consolidating this move. And at the moment, everybody, has agreed that we're okay up here. So unless momentum reverses very, very quickly, you generally don't want to fade it. So that's why I faded it early. And I'm no longer trying that. So that's a quick explanation of that. Okay. Okay. Sorry, I'm just reading through the questions, see if there's any other ones. I don't see them. Throw questions out if you have them, folks. No question is stupid. I will answer anything. What you're seeing on my screen right now, if you're a guest, I'll just explain really quickly what I look at. If you're TRG, you already know this, although my jigsaw domes here are simplified. That's something I did for this upcoming class. I'm only looking at what Jigsaw calls the total trades and the volume profile. In other words, I'm not looking at the real fast trade at a price, the current trades, and the momentum tails. So I'm basically letting it build me footprints from the point I reset forward. And I just did that so you can see we're getting a fresh footprint. And it's pretty balanced. There's not one side or the other being aggressive, and that's why price isn't moving. We're going to go up and push this high a few times, I think, but I wouldn't trade that either way right now. So one of the other things that I did, TRG people, is I consolidated my tapes and my power meters a little bit. What I'm doing here is I'm just running one tape. I'm filtering it based on the time of day right now. For example, I'm filtering ES for 10 or more and micro ES for 2 or more, 5 or more in NQ. And the reason I do that is I want to see the flow and the blocks. And as long as the tape is moving slow enough at this size filter that I can see it, I'm happy. If it starts really kicking off and going like that, what I'll do is I'll filter it even more so that I only see bigger blocks. And that way it will be a little easier to follow what's going on. The smaller stuff is less important. So in this case, we'll take this one up to 5 and you'll see it'll slow down because it's only going to print the 5 or mores. And then, where they were, bid or ask, and whether it was above the bid or below or whatever. I'm looking at a few different conditions. And then what's happening is the power meters are summarizing that for me. And I'm just doing it over 2 intervals. The left-hand one is 30 seconds, and the right-hand one is 300 seconds. So it's 5 minutes. So 30 seconds and 5 minutes. So basically just seeing if there's a trend in the delta. That's what I'm looking at with the power meters. And for scalping, that can be very, very useful.
Hey, Jeff, David is here. So if there was something you wanted to point out that was based on a question of his. Yeah,
those of you that were at the David's live session yesterday, that was a fun session. And there was a couple of things. You guys have seen my jigsaw setup look a lot of different ways. And most recently, let me just going to minimize all these for a second. Most recently, I think, let me see if I can show you this real quick. Yeah, most recently I was running it this way. So just so you guys can go back, TRG members, real quick. So remember, I was running it with the little power meter for blocks and the big one for everything, and 2 different tapes. Well, for the upcoming class, what I've decided to do is simplify that. And also, this goes to a number of questions that TRG people have asked me. Is Lance here? Lance is here. Good. Okay, so this goes to something that Lance had brought up once, and David brought it up yesterday in his session, his live session. And so real quickly, by running one tape this way and running it longer so I can see more of it, and filtering it for blocks based on, the time of the day and the instrument. So you can see right now, oil is starting to pick up, and not really watching oil today, but let's do that. So for oil, trade's pretty good size. So, let's start with 5. And again, what I'm trying to do is slow it down so that I can see it over a period of time without it going by too fast. If it was on 1, it would just shoot by, right? So for example, let me just put this MES tape on 1 and you'll get an idea what I mean. This is what I'm doing is I'm tape reading this, and this is a learned skill that is really useful for scalping. So anyway, so I put that on 1 just so you can see the difference versus having it on 5 or more over here for a different instrument. I'm trying to slow it down enough that I can get a sense for what's happening. And what do I mean by that? Well, like right now, look at gold. All of this is green or blue with a very few exceptions. So that means there's a bid under it. It's getting bought. It's pushing up. And I can see that in the power meters, this 30-second one. This is the ratio of trades to the bid side and the ask side. So right now it just went slightly on the sell side. Now it's on the buy side. This one is summarizing that over 5 minutes. So 30 seconds and 5 minutes. And when we open at the bottom of the hour in the indexes, this will be a lot more fun to watch because you'll see how delta can build over time as the market develops at a price. Pre-open, you're not going to see it as much, which is what we're in right now. But again, all I'm trying to do here is explain what you're seeing. So anyway, for the open, I'm going to whittle down the instruments a little bit right now. As I said, this is gold and oil. We're going to switch to just watching the indexes. So I put YM there again, and we'll leave gold up just because I happen to be trading it long right now, but we probably won't talk about that much in the live session. So basically, we've got MES, ES, NQ in the micro form, micro RTY, micro YM. And so going into the open, we will be able to see the correlation across them, and we will be able to see, if you watch these meters, the relative delta. So basically what I'm doing is I'm summarizing this meter or this tape. I'm saying over the last 5 minutes, so right now, let's look at ES. Over the last 5 minutes, there were 432 trades on the sell side or on the bid side, and there were 411 on the ask. So we're almost perfectly balanced at this high volume node right here. So, and that's exactly what you expect to see when traders agree on price. So we're basically seeing agreement, and we are in ebb and flow right now. And what do I mean by that? Again, that's the price action where we're just not going anywhere, as opposed to high momentum, which is what this was, or price discovery, which is what we saw right at the beginning when the number came out, where it's just basically trying to find value and is in exploration mode, if you will. Okay, so let's see. So yes, with respect to David's session yesterday, this is the simplest way of looking at order flow on the domes. And for those of you struggling with this, this is where I would start. That's why, as I said, I've reorganized this for the class this way. So there's less flashing lights, in other words. And the tape set up this way is going to be, let's see, is Vaslu here? Yes, Vaslu had said that, sometimes the tape can lead you into thinking there's absorption when there isn't. And that's a very good comment, and that's true. And so the trick is using the tools to help you understand what you're seeing on the tape. Just watching the tape itself is very, very hard to learn what you're seeing, but it's doable. That's basically my whole approach. I've been doing that since before there were any other tools. All there was the tape. I've been trading 48 years, since 1973, so I go way back. But now we have better tools. We have order flow tools. So not only can we see the trades, but we can see if they're on the bid or the ask, how big they are, if that's moving the price up or down, and that's what's relevant. So this is a price action approach to the markets. And the other thing we do in TRG is a structural approach, and that's what Lee does. And that's this kind of looking at the market in terms of these are 30-minute footprints over time. This is market profile, if you're familiar with that concept. Whereas what I'm doing over here on the scalping stuff takes elements of that, but what we're really doing is treating these as volume profiles. We're not so much worried about, for example, the TPO, the time price opportunity, or the time of day. We're just looking at the current moment, what's going on right now. And in a live tape read session, I tell you what I'm seeing. And right now we're seeing consolidation at the highs. This is very, very dangerous to trade either way. It wants to continue. We have no resistance above us because we've never been above us. We've never even been here. That's a good reason to be very, very cautious. On the other hand, we could easily come down to 15 or even 10, and that would just be a pullback in the move up, maybe a great long. So again, you just don't want to assume anything here. And that's the danger with technical analysis. Looking at it in terms of, pivots or trends or any of that nonsense is it forces you into predicting the future, and you don't want to do that. You want to trade what's happening right now. And what's happening right now across the board, look at all of my regression ranges. Everything is consolidating. There's strength in gold. There's strength in oil, which is this one. It's not up on the domes right now. All of the indexes are roughly correlated, and they are roughly up the same amount. NQ and RTY tend to lead, and they are slightly. So this is a decent move up. So at the open, I would just right now, absent any other information, I would say any kind of pullbacks, particularly into this high volume 15 area, I would probably buy, but who knows? Let's see what we get when we open. All right, so bonds had some beautiful HMUMO moves. Yeah, bonds, a lot of index traders warm up on the bonds before they trade the indexes. I don't like the bonds. They move too slow for me, but they can every now and then get a little HMOMO. What jigsaw instrument is on the left of MNQ again? Well, there's two of them. Right now, it's MYM, or it's the Dow futures, the micro. But I also have the ability to just put right over that oil, which is what you saw a minute ago. So that's oil right there in the same spot. And oil is pushing the highs. In fact, let's leave oil up because there's a nice little trade going in oil. We might join that for a long. Let's see. Oil is really aggressively moving up here. Look at that. Geez. I'm going to reset that dome. See if we. This is called a ledge break here when it takes out the highs or the lows of the session. And it's been doing that actually a while here, but it might be running out of gas. This is the view of that. See, it's kind of working its way up. So that one's worth watching. That's an interesting situation. Normally during regular trading hours, I would try to be long that. But again, oil has slightly different hours of activity, but I put them all roughly in the same buckets. And so that's interesting to watch. That and gold, I will watch after the open to trade more aggressively, but this could be a really good trade. When oil moves, it can be a ridiculously great momentum trade. Here's what oil's been doing lately. So, these are the overnights, that big move up, and then this was yesterday, and then this is where we are right now, this symmetrical profile here. So not a great long or short. It's trying to consolidate up here. So I would let that just continue, but it's worth watching for a momentum play after the open of regular trading on the NASDAQ, on the New York. Yeah, see, it's pulling back a bit. This might be an interesting spot to buy it. Hold on, let's watch that. It's right at the other end of the range now. Let's see if we can catch along right here. Watching that, looking for buying to come in, not seeing it. So I'll take a market if I see some buying come in, but right now it's actually going the other way. See, the energy's to the downside. So forming a high volume node right here. Okay, so let's see.
Elena's got a good beginning.
I'm answering. The best instruments to learn, Elena, are the U.S. indexes together because they trade correlated. So that would be ES, NQ, YM, RTY. And that's primarily what we focus on in the classes. But most of us in TRG look at oil and gold too because they are very, very good intraday instruments. Particularly gold lately has been a great one. I'm actually long the futures in gold. I'm also long double ETF, the UGL, and it's the gold trade is a really nice setup right here. Let me grab a look at that. And I'm not recommending anything. I'm just telling you this is what I'm doing. Okay. So this was gold at the highs. It had this big sell-off. Some big seller liquidated. We formed an ebb and flow consolidation. We fell out of it. That was a great opportunity to get long because it either came back to it or the bottom fell out and it came right back up. And now we're up here. So, we could get into here if we can break that high right there. So I continue to like that long, but again, make your own decisions. I'm not recommending anything. I happen to be long that right now. So, but that's the answer to your question, Elena. I use the micros when I'm teaching because, it's easier to not lose a lot of money if I'm wrong when I'm doing an example. And sometimes I put up examples of trades that are wrong on purpose to explain, here's why this is wrong. Like people shorting highs over and over again. You buy those, you don't short them because they always break out 99% of the time. So anyway, that the micros are not like training wheels versions of the minis. They are slightly more expensive to trade because the commissions are higher, but they do give you more flexibility. One ES, I can trade 10 micros for the same risk, and that allows me to scale in and out of a trade. So for that reason, even when I'm not teaching, I will often trade big blocks of micros because it's just more flexible. Depends on what I'm doing. Every setup is different and every instrument's different with respect to that. And we do talk about that a lot in TRG and in our classes. Let's see. Yeah, there's some good questions, feedback to you. Let's see. I'm just reading back over the questions. Okay. Correlation. Correlation is very simple. Indexes in the US tend to move together, Elena, and there's a reason for that. First of all, many of them are the same instruments. They're the same stocks. Here, I'm going to grab so this is a heat map of the indexes. So if we look at what's in the Dow Jones, well, Apple, Microsoft, a lot of these are also in the NASDAQ, and they're also in the S&P 500. So that's one reason that indexes tend to be correlated. The other reason is that money tends to move around in the markets in I'm trying to find a place to grab this. Money tends to move around in the market. Capital flows into and out of things in correlated waves. So when money's flowing into equities, it will flow into the different equity futures based on their risk profiles. Where, for example, ES tends to be, there's 500 of them. It's the most balanced. It's the least risky. The risky stuff is RTY because that's the small cap stuff. And then the NASDAQ, that's the tech stuff. So that tends to be where the most action is. And so NQ are really good futures to trade if you're looking for movement because you get the most movement there. So, and yes, we talk about all of these things in the class. And that's why it's so hard to learn if you don't take a structured class, because there's just all these different nuggets of information and you don't have any way of organizing them without, a formal presentation. So that's why we really recommend the course as a way to kind of get in and get your brain going on this stuff. And then TRG gives you the ability, with the workshops and the ongoing classes and interaction to expand your knowledge. That's basically.
And also, Jeff, the ability to hear and see stuff in real time, because right. you can stare at the tape and the dome as long as you want. But if you don't have the framework underpinning that of what to look at, and you're trying to work it out on your own, you're pretty stuffed. So, the benefit of us doing the live sessions that we do during the educational live sessions that we do during live trading hours is we can focus in on the important things to look at. There's, even with your stripped down point of view here, we are still looking at, we still care about maybe 10% what's on the screen.
Right. That's true.
And that's what we're filtering out. But, if you don't know what 10% to look at, you have no chance.
Right. And I'm also, there's a lot of different information on here. I don't need to look at all of this at once necessarily. That's my approach. And that's an important point. Well, I'm watching oil here because it's at an inflection point at the edge of the range. It's a very interesting spot. It's basically selling off of that big pop up. Hesitant to short it too. But anyway, let me show you what I mean. So let's just remove some stuff. So let's get rid of gold there, and we'll get rid of oil. So basically, this is just the indexes now. So if you're just looking to watch correlation at the open, this is the view that I use. And this is what we will use for the open. In fact, I'll leave it up going forward now. And you can see, I've still got charts up here for gold and oil. And, to simplify, I can just, get all of that out of my face. I'm very good at compartmentalization. I'm very good at only looking at one thing. Like if I'm trading, the ES, like I just was a little while ago, I'm just watching right here and I'm watching that tape and nothing else on my screen matters to me. And because I'm watching it unfold and I'm managing the risk of my position. So all this other stuff doesn't distract me, but I do get that newer people and students, it's distracting. So that's why, we can pare it down to the, I can even get rid of the YM here if I want and RTY. And we can just say, okay, there's the NASDAQ and the ES. So that's NQ and ES. And those are the primary instruments I trade. This is the view I look at most of the day. But having this other stuff up doesn't distract me, as I said. I find it to be complementary because I can see the correlation or the lack thereof. So anyway, we'll leave that up for the open. We're going to this session is going to go through what we call the open 5, and I'm going to explain that in a minute. And then we'll trade that right at the bottom of the hour, and then we'll wrap this session up. So anyway, we will leave those guys up so we can just watch the equity indexes.
Great question again from Elena, by the way.
Yeah, I'll get back to questions in just a minute. And I'm going to just throw gold up there too, just for fun. As I said, I'm long gold, so I kind of want to watch the cash register ring here on gold. So we'll put it back. Give me a second to do that. Okay. So, yeah. Oh, gosh. If gold can get back up into 1800s, I'm in really good shape because I have the UGL, which is the leveraged gold ETF and the futures right now. So it's a good spot. Still like that. All right. So questions. Let's see. I see a couple of how long are the sessions for the upcoming course? Everything you want to know about the course is on the link that we just posted a minute ago. JVC, please repost the link to the course info in the chat. Okay, so our pre-market high and low, also inflection points, same as stocks. They're more important in futures because in futures, there's one market here that's totally transparent. Everybody buying and selling, we can see. Stocks don't work that way. Stocks trade on multiple exchanges and they trade off the exchange and a lot of other things. So any information from market profiles and volume profiles in stocks is always a best guess. In futures, it's perfect because there's no other place to trade ES but on the CME. So for that reason, they are much, much more accurate. In futures. And I watch those, yes, they're significant inflection points. So right now, if I put this back out to 5 minutes, we can see the overnights and the recent session. Oh, I need a couple more days here. Hang on a second. Oh, Ninja with Zoom running is a little slow to go get data for me, so hang on. I have a very fast machine, but it doesn't. Zoom is not good for anything with respect to that. Okay, 3 days should be enough for this. Okay. All right. So this is the ES, the S&P 500 futures. And the blue bars are the high and low of the first hour, which is called the initial balance in market profile. And you can see that those and the overnight highs and lows are often inflection points. Like right now, this is the overnight high, and that's what we were ebbing and flowing off of, Elena, until we got the number. And then we shot up to this area where we're establishing this new high volume node up here. So you can see the types of price action we trade perfectly on this view. Ebb and flow, high momentum, ebb and flow, and price discovery along the way up there. So perfect example. I'm going to put that back to 90 seconds for the open. Okay, do I see any other questions? No, I don't. Okay. If you're interested in the what we cover and the structure, everything is explained right here. And that's the link that's up in the chat. Okay, so basically, guys, we are before the open in about 15 minutes. So I have a little process I run through. I look at what's going on. We have no upcoming news until 7 my time, top of the hour, the first half hour. We have some factory orders information. Other than that, there's not a lot of outside information going to hit the market at the open. We already had the NFP, which was the biggie. The technical picture, we already looked at that. The market is in a fairly strong move up. We have this nice overnight double distribution that formed. And it's very risky in the middle of that, but at either end, that's interesting to play. So we have a nice setup going into the open to potentially scalp. So we'll keep an eye on that. That's the top line here. And the second line, the auction structure is this over here. We looked at that already. We had unfinished business at the highs. We took it out, and now we're consolidating up here, and it looks very, very orderly. I would not suggest at this moment that buyers or sellers are in control up here. I think it's very balanced. And that's interesting considering the big move up here. It had virtually no pullback sell-off. I was able to scalp it short a couple of times. I got about 8 ticks doing that. But absent that, not a lot of other movement yet. So that's worth watching. And then price action, obviously that changes. So we're pretty much ready to go here. We know what we're looking for. And so let's just kind of see what happens at the open. The open 5A is one of my trading setups. Let me go back to my process. I have a variety of setups that I trade at different times of the day, and this is what we teach in the class. But right now, what we're looking for, the open is a high momentum event, and HMOMO we call that, and I'm going to explain this trade really fast. The open 5A is basically price discovery at the open. And so let me spend 5 minutes explaining this setup, and then we're going to get it, and then we'll trade it if it's giving us anything tradable. If you think about who's playing in the market and what they do, it's very simple to understand this setup. Overnight, in other words, the Globex session, starting at 5 o'clock Central and going till 8:30 Central. That is when you can trade. The volume is low. A lot of retail traders trade it. A lot of semi-professionals trade it. The people that don't trade it are really large volume pros for a number of reasons, not the least of which is the volume is too low for them to play. If they put on the kind of size they do during regular session, they become the market, and they don't want to do that. The second reason people don't trade overnight is because they're not allowed to. There are a variety of types of funds that have restrictions. Mutual funds do not trade overnight, for one simple example. And that depends on the rules of your fund. But the takeaway is that no big money trades overnight. That's why the volume is low, and that's why it moves around a lot. However, whatever happens overnight moves the price. So if you're a big trader and overnight the price went way high, in your opinion, when the open hits, you're going to sell it because that's your interpretation of value. So basically what happens right at the open is we get a price discovery event. Everybody is gaming out and trading what they see from the overnight. And sometimes news happens overnight, or the NFP number comes out, or whatever. So there's traders that want to play off of that. The other thing that happens is, bona fide new positions are being put on that have nothing to do with the overnight. All of that is happening in the first few minutes at the open. So what happens is we often get very, very strong directional moves. In other words, HMOMO, high momentum. So the trick to this setup is don't think if you get high momentum in one direction, you go with it. That's all there is to this setup. So let me show you another view of this process that we follow. And you'll see that a little clearer. This is the setup we're trading right here. So we're looking for overwhelming momentum in one direction, and we're going to go with that. Now, the thing is, there's often a little bit of a head fake in this trade where it will start to go one way and then it will go the other way. And again, the psychology of that makes total sense. If you think about it, the market opens and you're sitting on 1,000 lot you want to play. You're a big trader, okay? Are you just going to immediately throw your 1,000 lot at the market right when it opens? No. You're going to see how it opens and try to work your trade into the market. and so is everybody else. So often there's a piling on effect right at the open where, one big block of buys will go and the other guys will say, okay, if he's going to go, I'm going to go. And so you get a lot of piling on. That's why you never want to fade this. You never want to go against the momentum at the open. And you should use market orders to trade it. You can use limits as targets if you're using targets, but to enter, it's often moving too fast to use limits. So I enter at the market. And so that's the open 5 trade. It's over after about 5 minutes because everybody settles down. And then we go into a more market profile approach. And that's how we trade it at TRG. Lee is the market profile expert, and he starts looking at the structure about 45 minutes into the regular session before the bottom of the first hour, which is the initial balance. That's where all the market profile players are playing. So this is kind of a momentum / scalpers approach to trade before we get structure. And then once we get structure, we can play off the structure as well. So that's a brief introduction to the Open 5A setup. There's also a setup called the Open 5B, which I'm not going to bother explaining. It comes later in the session. One other thing really quickly, on all of my charts, the opening range is illustrated 2 different ways. There's, let me get a different view of this. Hold on a second. Let's put that back real quickly to 5 minutes and then I'll show it. Sorry, I'm just trying to get organized and get the charts where I want them so I can show you this real quick. And it takes a minute. Okay, on all of my charts, there are blue lines and there are yellow lines in the regular session. And those are those 2 ranges, the open 5 and the first hour or the initial balance. So that's what this yellow line is here. So the market opened here, and then that was the top of the 5-minute range. We call that the open 5. And on this particular day, yesterday, we had an opening drive, and it just kept going. And so far, it still is. Although whether that continues, we'll see. There's going to be some great opportunities to scalp this, I think, this morning. So anyway, that's what we're talking about, and you'll see those lines on my charts, so you know what they are. Those are the only, I don't use any indicators of any kind. I'm just looking at the volume and I'm measuring that opening 5 minutes and the opening hour. And that's it. The other things you're seeing at the bottom here, those are just the deltas. So I'm just looking at whether the volume's on the buy side or the sell side. The bluish green is the buy side, the kind of pinkish is the sell side. So in other words, is it going by at the ask or is it going by at the bid? Or sorry, the other way around, the bid or the ask. Okay, so let's see. Looking at the questions again. Yes, we will talk about, I do not recommend trading NQ right at the open. I'm looking at Summer's comment. Just, it's a little too crazy. You can trade it, but my view is the open 5 is a ES trade because the bulk of the money that we're playing off of with this idea of kind of balancing out what happened overnight is going to be in the ES. And then once it settles down after the first 5 minutes, that's where I go looking for NQ trades. So we've got the 4 indexes and gold up here. I'm going to minimize gold for the open so we won't be distracted by it. So now we just have the 4 indexes, MES, ES, NQ is this one right here. I have NQ and magenta on the power meters to call my attention to it because it's my favorite thing to trade when there's a lot of activity. And so I watch that and it, because it looks so different than the others, it catches my eye. I also make it kind of a purple on my charts. And again, that's just a reminder to Jeff that that's the one you play when it's moving around a lot because that's where the momentum money always is. And so I have little visual clues I use in my trades like that. Let's go ahead and get rid of gold here so we don't have to be distracted by that. Okay, so we are all set. The open is in 9 minutes. I'm going to take a quick break. What time frame do I use the most for scalping? Elena, you're not going to like my answer, and I'm not saying it in jest. The answer to your question is now. The time frame I use to scalp is now. Relentlessly in the now. There's no other time. The charts are just tools. Markets go up and down, and there is no time frame. They're open 24 hours, and any time frame, 5 minutes, 3 minutes, 90 seconds, 15 seconds. Those are just artificial ways of carving up what's happening. So there is no magic time frame, regardless of what all the Furu people tell you out on Twitter. It's just different ways of looking at different buckets of the same stuff. Everything that Lee and I do and all of our members do in Trading Research Group is about what's happening in the price, which side of the trade is it on? Is it buy side, is it sell side, and how much volume is there? That's all that matters. Time frames are just arbitrary slices of that. But good question, and it's very important to get that out of your head. The head fake that I'm talking about that can come right at the open is typically 30 seconds or less, but sometimes it can be more than that. Basically, you have to watch the tape and see, does it look like it's head faking? Are people throwing up bids and pulling them, or is trading actually happening? If it's actually happening, it's not head faking. If people are throwing up bids and asks and they're not filling, they are filling, there's stacking and pulling going on, that's price discovery, and that's what the head fake looks like. And we typically get that right in the first 30 seconds of the ES, and sometimes in NQ it goes a little longer than that, because NQ is the animal that it is. Okay, there is a potential overnight flip setup, Amy, you are correct. Another setup we like a lot in TRG is called an overnight flip. When the market moves up on very low volume, which is what we have right now, there's only 202,000 contracts have traded in the ES. So that's low volume, and we're up 14 points. I like to do a flip when we're up more, like 20 or more on low volume. I like to trade against that, and this isn't quite there, and this entire move is all about the NFP. So we may or may not get one. It's a possibility today. I'd love to see a push up that gets sold. That's the ideal scenario for the open for me. Have it open, have the open 5 push up, maybe 30 area, whatever, wherever it stops, and then have some sellers decide that's a good spot to start selling. I would join that short very quickly. So anyway, I'm going to go warm my coffee. We have 6 minutes. I will come back and answer any other questions. Please post them in the text chat. And in the meantime, if anybody wants to comment, JVC or Lee, if you want to add anything structurally to the context, please do.
I have nothing special to add.
Yeah, I was pretty comprehensive there. I must admit.
You absolutely were.
But I got to tell you guys, particularly Scalping Circle members, this is a perfect setup to scalp the open. And what I like to do at this point in the morning, I'm at my coffee machine, so you're going to hear some background noise. What I like to do at this time of the morning is just, what are 2 or 3 possible scenarios that are happening right at the open? Well, I just nailed one of them a minute ago. Hang on, I've got a reminder in my ear here, which you're probably seeing on my screen. Yeah, okay, there's my open 5 reminder. All right, anyway, the push up that gets sold, that just, get the last group of people that are still trying to short this and stop them out, and then, see some real selling. That's a possibility today. Another possibility that's really likely is we drop back down to this 10 to 15 high volume node down here, and it gets bought, and I would jump on that trade too. Absent those 2 ideas, I'll just go with the momentum, whatever we get, and then not have a preconceived notion that it's going to do this, that, or the other thing. Price levels are irrelevant. There's no such thing as support or resistance. Inflection points are places we might get to that might get bought or sold. But don't, look at the low of the overnight and say, well, that's support. No, it's a spot that will probably be traded aggressively both ways. Same thing with the high of the regular session yesterday, which is right there at 12.25. We ebb and flowed around that all night. So that's the spot I'm going to watch first, is 12.25, which is right there. So that's just a little reference point. Okay, I'm going to go back and get my coffee. Let's see if there's any questions. Nope. Okay. Yeah. What we do is really, really simple. You have to just blank slate your mind, Elena. Forget all of the nonsense that you've read everywhere. This is really simple. Is price going up or down? That's the first question. Up. Okay. Then we're looking at longs. Down. We're looking at shorts. unless it's at a major inflection point. So first question, are we going up or down? Second question, are we doing it with momentum or not? Do we want to fade it or join it? And the way that I look at that, I have actually a document that I've shared with the people in TRG, and I go through literally the Q&A. This is how I make that decision over here on the left. Direction, momentum, nearby inflection points. This is that matrix right there. Look at that real quickly while I get my coffee. Okay, just in the nick of time, he's back. Let's close that. And I'm gonna reset my domes so we can watch the volume. And the volume profiles will reset right at the open here. So we'll see a fresh volume profile on all of these as well. Okay, let's see. Questions. Yeah, we are a holiday weekend and big fat whole number and all that good stuff, Amy. I totally agree with all that. That's why I have no preconceived notions, but if I had to just pick a direction, I want to get short anywhere up here. That's where I'm at, this morning. It's not a bias. It's just, if I can get short anywhere near the high of this overnight or above it, I think that trade will ultimately work. But, we could open and go up another 100 points. Anything can happen anytime. Never get married to price levels. That's the number one mistake new traders make, is they say, well, there's going to be sellers at 43.30. How do you know, and who cares? When we're at 43.30, we'll see if they're sellers. This idea of predicting support and resistance is such stupidity. Anyway, support and resistance are stupidity. Those concepts make no sense in real markets. Inflection points, that makes sense. When markets get to spots that are aggressively litigated, they trade aggressively, but predicting that they're going to go up or down based on what they did the last time at that price is daft. Okay. Here we go. We are off. The market is open. It is trading strong. This is good. I want to see a push up to maybe sell into. I might start selling into it right here. In fact, I am going to go ahead and put one on short there just for fun at 22.25, and it's already working, so I'm reading the tape right. So let's lock in a stop there and see if we can catch a big runner down. I'm locking in a point here. And looks like I'm not going to get filled. Cool. All right. So we're short 22.5 with a profit take stop at 21.25. Now 20.75. I don't want this to go against me. Always take profits. So far it's working nicely. So it's playing out scenario one. Get short and ride it down. Might even add to this, but I'm going to protect my profit at the moment. Let's watch it. Okay. And you can see how the meters play out. Again, left side is 30 seconds, right side is 5 minutes, which isn't relevant yet because we haven't been open 5 minutes. You can see the aggression in the blocks here on ES on the sell side. And now there's buyers coming in. So I want to make sure that I've got that take profit stop because I'm likely to get hit there at 20.5. Boom, we did. Nice little trade. We just caught, 4 points there. Excuse me, 3 points. So I'll take it. Back to sitting on my hands here, and we'll give it another shot. Look how NQ is bouncing around here at its highs. And notice YM and RTY at their lows. Another reason to stay short on ES would be that, and maybe try to add to it if we get a little bit of bounce. I don't see aggression that's going to take these highs out, but it might. That could have been our head fakes. Let's see if we can get a better short on here. I'm going to let that one go away, and we'll just watch it. So I'm short 21 again, and it's pushing down. So I'm going to take profit on the first one of those there because I think we're going to bounce off 20 again. Let's see. So you can see kind of where I am in line. There's 132 there. I'm 110. And okay, we got that filled. Let's lock that in with a stop too. That got filled. Wow. All right. So far we've got a lot of really small scalp winners here with no direction, and that's okay. Again, I don't really care if it goes one way or the other, as long as I can get good entries and take money out of the market. So we've been open 2 minutes now, and so this is still playing out, and it's still being litigated. They're still arguing. Notice how RTY is pushing its low, YM is pushing its low. That is not bullish for ES when that's happening. And as it started, it's really, really working 20 though. I'm watching that 20 has held really aggressively. So that's kind of my line in the sand right now. And if you watch this view here, you can see the volume of the move down was 7K, And then we had a move up of 6K, so balanced, and then a move down on 3. So it's diminishing in the range. So basically, the market is accepting this range right now. This is being accepted, is what we're seeing. So unless this low goes, which could set up a really nice short, or it gets back up here, which could be a short or a long, depending on what it does up there, or maybe here. Right now, we want to just stay out of the way, okay? So that's what's going on. I'm going to erase all that shit, and we'll put this back up. Okay, so that's what's happening. Really balanced over here. So now is about the time I start looking at NQ for trades. Gosh, it might be a short, but not yet. I'd like to see it push more aggressively up first. So if you're into gap fill stuff, I keep an eye on that too. And there really wasn't much to work with here. When we get to 5 minutes, I'll show you what my gap view looks like. That'll be easier to. Okay, so again, just we're consolidating right here. I'm gonna take a wild guess here that we might push up one more time. For those of you that like footprints, I do also have a footprint view, and that's just another way, again, of looking at the same information. And so, it's consolidating around the open here, and we can see that in the action. We don't need any kind of tool to tell us that, at least not right now. Basically, this is what's referred to as A period, and A period is forming. And it'll be for the first half an hour. And until we get, past A period and into B period, that's about the time that structure starts giving you some good clues as to what's going on. At this point, the price action itself is pretty much all you need. And you can see it's happening across the board here. YM and ES, or excuse me, YM and RTY held their lows and some buyers came in. You can see right over here and right here. So we're stabilizing at 20. So basically, the Open 5 is ending right now, and we have value and balance right here at 2021. So from a scalper's point of view, there's no trades right now. We need this range to get extended either to the downside or to the upside before we can play some more. So that is my read of the Open 5. So I always take a quick mental break, and I go run up and down my stairs, which are just outside the door. So you are hearing me do that right now. And this is just to kind of reset my brain and get out of scalping the open mode and get into, okay, now I'm going to have more information. I'm going to get structure. I'm going to see how it trades. And so now I can start making more bets that have more information behind them because I have more information. Like right now, the market is getting bought here. It's trying to head up and take out the highs again, but there's some sellers up there. So, from a structural point of view, this has to play out some more. From a scalping point of view, remember, the first thing we need is direction, and in ES, we don't have it. So let's leave that one alone, and let's go watch NQ and see if we can find some trades here. So NQ, I still like it short, but dangerous spot to play it short. NQ, you got to kind of let it come to you. So I've got an order up there. Let's see if we can get filled up here somewhere. And maybe... And again, this is something I tell the TRG folks all the time. If you're going to play NQ, you have to stake out a spot for your idea and let it come to you. If you do it the other way around, you'll get run over all the time. You can't just join an NQ trade unless it's really moving with momentum. Okay, I'm going to take a short there. 52.5. I'd rather get it up at 60, but again, this is kind of a hard short because NQ can be really fast. But this is the setup I like in NQ. When it's pushed up and it's kind of running out of gas, it'll probably run over this high, and then I'll get filled up here. That's what I'm trying to do. This is called a ledge break, and they usually do break, but this one, like I said, starting to run out of gas. I'd really like to add to this. So then we'll have a nice little two-lotter to play with here. So no, I'm not adding to a loser. I'm getting a better entry on the trade I really want. Okay, there it is. So now I'm short 56 here, and I'll flatten out if it breaks the high again, but what I'm looking for is, a consolidation pullback into here to take some ticks off. That's what we're doing. So this might be a good spot right there. Take $5 off. We got it. Now I can trail it, and maybe we'll catch a runner down. Otherwise, we'll lock in profits. So there's another one short from 59.5, trades 52. Bring my my take profit down, trades 53, we got filled. Okay, so that is how you scalp the NQ. Any questions? Thank you, John. Have a good holiday. There's 3 rules to trading, Elena. All trades start as scalps. And in scalping, I have 3 rules. Number 1, good trades work right away. If you go into a trade and it's not working, you're either early or you're wrong. That's scalpers. That's the creed of scalping. If you don't think that way, you will get just run over and over and over. Scalping is a game of getting into the market when the odds are overwhelmingly in your favor, grabbing some ticks and getting back out. And if you can leave a runner like I showed trying to do, that's fine. Sometimes you'll catch those. I've caught one tick or one lot $1,000 runners in NQ doing that. But you don't want to expect a runner. You take whatever the market gives you. So good trades work right away. Always take profits. That's the second one. And don't lose money. If a trade's not working, get out of it. Hit the flat button as your stop. Quote unquote, give the trade room to work is nonsense. If it needs time to work, then you're either early or you're wrong. It should be working. If it's not, something's wrong with your analysis. Now, that doesn't mean you can't stake it out and say, okay, I'm going to enter here and I'm going to stay here until it does the following. Markets, your target or what you're trying to get from the market can be based on time or it can be based on price movement. Markets consolidate both ways. A market can consolidate from a move up here to 20 by pulling back to 15 and then back up to 20. That would be one way it could do it. Another way would just be to sit up here at 20 for a while. It becomes balanced just by the virtue of time. So, okay. Hope is not a strategy or a stock symbol. That's true. Hope and pray are not stock symbols. Always take profits and good trades work right away. You never sit, particularly in a scalp trade. That's just danger, danger, danger sitting in scalp trades because you're trying to predict the future in a market that's very, very unpredictable. So anyway, questions, comments, anybody? People always say, well, can you make money doing that? What I was just doing? Absolutely. Every one of those trades was profitable. Even if you just get a tick in ES. Tick in ES is $12.50 before commissions. And if you have a decent commission rate, should be around $4 or less. So call it, $8.50. Every time you get a tick in the ES, you make $8. Trade a 10 lot, you make 80. You can do that all day long. Why take risk doing other things as a scalper when you can manage it that tight? And you have to manage it that tight. That doesn't mean that structural trades are managed that way. There are trades where you have to, wait for something to play out. Like if you were looking at it from this point of view and making a trade over, say, the first hour in the initial balance, the market profile approach, that is totally legitimate too, but that's not scalping. What we like to say in TRG is that all trades start out as scalps, because if it's going against you, get out of the way, structure or not. But the combination of the two elements of information, the short-term price action and the longer-term, as in 30-minute price structure that's showing the structure of the auction, that is the holy grail of information. You need nothing else but those two things. So now you can see we've got price action pushing down. And so this is very interesting. Does that 20 hold? Are the buyers going to come in here? So if not, we could break down to 15 really quickly. So this is an inflection point, and we're looking for either a long or a short. I don't have a preconceived idea either way yet here. I'm watching the action and I'm saying it's a short right now, but price isn't really going down. I might join this short. Tough one, because managing risk here, it could bounce up to 21, 22. And if you're short, you're screwed. So, just joining that is dangerous. It's not making any headway. So let's watch it a little more. Yeah, see, this is the problem with being short right here. If it goes against you, where's the stop? Because, I want to be short up here right now. That's where I want to be short, not down here. But if this low breaks, I will join it short because, it'll probably come all the way down to here at least, if not, down into 15. But so far, yeah, see, look at the blocks coming by on the buy side right there on 21. That's why this is perfect tape filtering right now because I can see that happen, but I can also see the 10 or less stuff. So that's why I was talking about adjusting what you're filtering for based on the action, and the power meter is showing all trades, filtered or not. So you can see the buyers coming in there, and the balance of it over the last 5 minutes is on the buy side. So I would not be short here for that reason alone. 0 pence at 1275 are meaningless right now. It's way too far away, Lance. Okay, thanks, Lee. No problem. All right, are there any questions or comments? I'm gonna start wrapping the session up here because it's obviously we went from 5:15 all the way through the open. My intention was to get through the open and then wrap it up. So we did that. Are there any questions I can answer for anybody about anything we've talked about the class, about my style, yada yada yada? Yeah, I know there's stops down there, Lance, but we're nowhere near there. That's 10 points from here. I couldn't care less right now. But, I hear what you're saying. I'm not disagreeing with you. I'm just saying, that's not even on my radar. It's on my radar when we're trading down there. Okay. Yeah, we don't use any sort of fixed stop, risk reward ratio. That's all furu nonsense bullshit. There's no way to do that in markets. They don't work that way. They don't predictably trade where you can use a 6-tick stop and a 12-tick target. Total nonsense. You take what the market gives you when it's giving it to you. Right now, it's going up into a strong high. This is a place to look for a short. So I just shorted 21.5, and I'm going to try to add to it if it bounces. And so let's watch it and see if we can just grab 4 ticks the other way. So I'll put a buy order at 20.5, so we'll see if we can grab 4 ticks. Questions? I don't see any yet. Okay, cool. So let's see if we can scale into a long here. Oh, cool. Boom. We got a little push up. I got another one. So now we're short 2 at an average of 22. We'll take the first one off there at 21.25. This looks like it's going to go up. I think we're going to break the highs here, and that might set up the trade I was looking for before. But we'll do one more example here. I think this is actually a long. I might trade it long over here. You know what? I'm going to do that. I'm going to trade that long for a 1-tick drill in the ES, and I'm short the micro. So we're going both directions here. So this is a fun little game I like to do sometimes, but I may end up getting burned on that one. Yeah, let's get ready to get out of that. Yeah, I don't like that 1-tick drill. I like my short better. Okay, so we're going to add to the short if it bounces. That's what it's telling us it wants to do. Okay, questions. If you have them, post them. I'm going to just play with this little short. I'm short 22 with 2 and target or a first buy order at 21.25 for the first one. Let's see if we get a fill on that. Looks like we're about to. And come on, there we go. Okay, it's about to fill right now. And boom, we got it. Okay, so now we can take that off and lock it in with a stop. And now we'll just see if this plays out. And so there you are. And so, if I get a runner, I get a runner. If it drops to 15 now, I'll write it down. But I'm not going to use a target because it just bounced up and I took profits. You never predict what's going to happen next unless you have a real good tool telling you that something is going to happen next. And right now the price is telling me it wants to go up. So I'm going to get a better short higher up here somewhere. So far, we're profitable on all those though. So there you go, except for that ES one, that one. The 1-tick drill didn't work over there, but I think we're going to get that now again. I might try that one again. Anyway, other questions, Pete, let's see. If you fail to get the extremes of the LRC on a setup, I haven't said anything about the extremes of an LRC. Do you catch the after effect there, however short, or sit on your hands? Have I used the LRCs at all here? That's just telling me the range. I don't use those for extremes necessarily. They're just one way to measure it. So that you're doing what I don't do, Pete. I don't sit there and say, well, if it gets there, I'm going to short it. That's just telling me what's happening right now. So you have the sequence backwards. Okay, does that make sense? This is going to break long here, and so that will be an interesting way to play that. And I'm going to try my 1-tick drill again here. This time I think it'll work, but you never know. This time I'm going to buy a dip also on my 1-tick drill, which I should have done last time. Do we trade every day? I trade if there's stuff to trade. I'm in the market watching almost every day, Elena. Some days there's good setup, some days there isn't. Okay, that worked. The long worked here. And now we're headed up to where I've got some sell orders. So that's working really nicely, that long over there. Let's get rid of that one, flatten it out. Okay, so I'm going to let that push a little higher up. Actually, this is a long. I'm not going to try to short this right now. I'm going to let it go and see where it stops. This is looking a lot like it has more to go up right now. So I am not going to get jumping in front of it short. All right, we're going to wrap the session up. So if there's any final questions, please put them in the chat. There's a bunch of them every week, Elvish. We have a Sunday reopen live session. We have a Ides of Monday morning. There's a scalping group once a week on various different times of the day. There's a structure group on Thursdays. We have a fishing trip on Thursdays. And we often have round tables on Saturdays. There's stuff going on all the time. And no, we do not have a trading room. That's furu nonsense bullshit. We put on courses or we do live events like this one to teach something. Like I'm teaching how to trade the NFP and how to trade the Open 5. But you have to learn to do it yourself. You don't learn stuff watching me. I demonstrate a technique and then you go practice it yourself. That's how it works. And that's the right way to learn. I have a background as an instructor. I was a sales trainer at IBM and Microsoft. I have a background in tech and venture capital and trading. Obviously, I've been trading my whole life, and I love it. It's my passion. See how we're making highs here, so I'm not going to run in front of this short right now. I will let it keep going until it tells me that high is high enough, and it hasn't done that yet. All righty. Any other questions? I think we covered those. Okay, cool. All right. Burning desire is going once. This is how we wrap meetings up. If anybody has a question or comment, they absolutely have to make. We call that a burning desire. If you have one, get it in the chat. Otherwise, we will be out of here shortly. Thank you, everybody. Thank you, Summer, for all of your help and showing other people the light here. We appreciate that. Thank you, Gary Grov. I hope I'm saying that correctly. Elvish, thank you. Thank you, everybody. We appreciate it. We always enjoy when you come to our public live trading sessions. They're always fun. And TRG people, we will see you in the pit. The next event on the calendar is this weekend's reopening on Sunday, I believe. Correct me if I'm wrong, JVC?
As far as I am aware, yes.
Okay, and then also there's the Austrian Grand Prix Part 2 this weekend. Last week we had the Strian Grand Prix. So if you're a Formula One fan, practice is today, qualifying tomorrow, the race is Sunday. And the Max versus Lewis Hamilton show, Max Verstappen. And keep an eye on Lando Norris coming up the rear. All righty, guys, have a good one. We will see you in the pit. Have a good weekend. Have a good holiday.